What is up, guys? Welcome back to my channel. My name is David Hanlon, aka the Laptop Legend, and in today's video I want to talk about a concept I haven't really discussed very much on this channel, and that is why I trade in a Roth IRA. Now, for those of you who are unfamiliar with investing in general, you might not know what this is, so I'm going to explain that in this video and talk a little bit more about why I think it's such a good idea if you're day trading to do it within a Roth IRA versus any other type of investment account. Now, there's also a lot of other types of investment accounts that I want to just get into a little bit in this video, but I think it's going to provide you overall with a really good idea of what you should be doing to make the best use of your investment accounts that you have available to you to maximize the amount of gains that you can have and minimize the amount that you have to lose to taxes. So that's pretty much what I'm going to be talking about in this video. I'm going to dive into my computer just so I can have a little bit to reference and maybe show you guys some on the screen. So let's do that right now. But first, make sure you like this video if you like the video, and subscribe if you haven't already, because I put out content like this every day. I love helping people make more money. It really warms my heart. So let's dive into my computer right now. All right, guys, so I'm here at my computer, and you can see this is the Investopedia page describing what a Roth IRA is. But I just want to go over it really quickly for you guys. So a Roth IRA is a specific type of investment account, and this falls under the category of retirement account. And if you guys don't know anything about this, I'm going to assume you don't, just so I can, provide as much information as possible for the beginners. If you already know this, well, maybe you'll learn a little bit extra. So Roth IRAs, again, they fall under the class of retirement account, and these retirement accounts get special benefits over just typical investment accounts, which are typically called brokerage accounts, in individual brokerage accounts, IBAs. So in this case, I like Roth IRAs because they have one very specific benefit that makes them extremely useful when you are day trading. Now, if I go down here just a little bit, you can see they are kind of paired up with a traditional IRA. So there's Roth IRAs and traditional IRAs, and these are the two main, individually managed retirement accounts. If you have a 401k, obviously this is through your employer, and if you're self-employed, typically, you're going to have one of these. Not to say you can't have these if you work for someone else, but this is typically, if you're self-directing your retirement account, it's going to be one of these two, Roth IRA or traditional IRA. And the key difference between these is that the Roth IRA, again, the Roth IRA, this is how you spell it, the Roth IRA is where you pay taxes on the money that go into your account, but all future withdrawals are tax-free under certain circumstances. So in a Roth IRA, you take income that you earn, that you've already paid taxes on, and you put that money in your Roth IRA, and any earnings that you get within that Roth IRA, you withdraw that tax-free. So if I earn, say I earn $15,000, for whatever reason I pay $5,000 in taxes on that, now I have $10,000 left. If I put those $10,000 into my Roth IRA and I grow that $10,000 into $120,000, which is what I've done up to this point, if I do that, I can then withdraw that $120,000 when I'm allowed to withdraw and pay zero taxes on any of those earnings. Zero taxes. Zero taxes, which is insane. Now, on the contrary, if you have a traditional Roth, golly, I cannot speak, guys. If you have a traditional IRA, what happens is you don't pay taxes when you put the money in, and it counts as a tax deduction. So say I made $15,000 and I put $10,000 in my traditional IRA, that $10,000 would be a deduction, and I would only have to pay taxes on the $5,000 that I earned. So this can significantly decrease the amount of taxes that you're paying if you're, using a traditional IRA. So typically speaking, if you think you're going to be in a higher tax bracket up front, you'd use a traditional IRA because it's going to lower the amount of taxes that you pay. But me personally, with day trading, knowing how profitable day trading can be and knowing how exponential these growths can be, I think it makes way more sense to do day trading within a Roth IRA. Because in a traditional IRA, you're going to pay taxes on all those earnings. So you might not be taxed on the $10,000 you put in, but if you grow that $10,000 into $120,000, now you're being taxed on that $120,000, which sucks, man. So if you think that there's a chance that you can grow your retirement account or your investment account into something a lot bigger, Roth IRAs make way, way more sense because you withdraw it and you pay zero taxes. Now, here's the catch. It is a retirement account, which means you cannot withdraw your money with a few exceptions that I'll talk about, until you are 59 and a half years old. So this day trading that I'm doing right now, I cannot touch this money unless I want to pay a huge fee until I'm 59 and a half years old. Now, there are some notable exceptions, so I want to talk about that. But one other thing is, if you're like 55 right now and you start your account and you make your first deposit, you're going to be fine. But if you're like 57 and you want to start a Roth IRA, you're going to have to wait at least 5 years. Otherwise, you're going to have that penalty. So just keep that in mind. I'm sure I probably have a few viewers who are of that age range. So keep that in mind. Now, here's how you can withdraw money from your Roth IRA without paying any fees. You can withdraw up to your contributions without paying any fees. You just can't withdraw what you've earned. So in my case, I've deposited, I did the math, it's around $14,000 is what I've deposited into my Roth IRA. And I've now grown it to, I think it's like $119,000 right now in the last couple of months. And that means that I am allowed to withdraw up to $14,000 without paying any fees, without paying any taxes, and I can keep that money. But if I want to withdraw the rest, if I want to withdraw the remaining $100,000, I'm going to have to pay, number one, a 10% fee for early withdrawal, and number two, my highest tax bracket that I'm in. So whatever my income is, whatever the highest tax bracket that I'm in, I forget what the word is, but you know how you pay like little echelons, there's like little levels, and you only pay the highest percentage on the dollar amount that gets you above. It's like that. So you pay that highest percentage on everything that you're withdrawing plus a 10% fee, which means that if you plan on withdrawing your money from the Roth IRA or you're going to need it, this might not be the best option for you. But if you have some other source of income, like if you have a business that gives you a lot of income and you want to get into day trading, maybe you're retired, you're 40 or 50 and you have a business or something and you want to get into day trading, Roth IRA is going to be your best option for sure. If you don't need to touch the money, do it in a Roth IRA. If you do need to withdraw it, worst case scenario, maybe you can just withdraw what you've contributed and still not have to pay any taxes on it. No fees, no anything. If you need more, you're going to have to pay the 10% fee plus your highest tax bracket, which stinks if you really need the money, which is why I recommend, don't do this unless you're not going to need the profits from day trading. So for some of you guys, this might not work, but I think it's a really cool idea, especially if you have another hustle, another source of income. For me, YouTube. For me, e-commerce. I have a lot of different streams of income. For you, it could be Fiverr. It could be any amount of things online. You could run a lawn mowing business. You could run a construction business. I don't know. I don't know what you guys do. But if you have some other source of income, trade in a Roth IRA because it's going to be the best way to grow your money without screwing yourself over on taxes. Now, another limitation is that you can only deposit $6,000 a year. They limit the amount you can deposit. So you can't just throw 50 grand in a Roth IRA. You can't just throw 25 grand, which would get you over the PDT. Which means if you plan on trading in a Roth IRA, you should start taking advantage of the fact that you can deposit a certain amount per year and max it out every year so that you can get over that $25,000 pattern day trader rule, because that's where you're really gonna be able to take off. So that's what's important. And I think they give you up until, I believe it's April, I could be wrong, do the research on this, but I believe it's April to deposit for 2020. So that means right now you can deposit $6,000 for 2020 and $6,000 for 2021. Which means you could get up to $12,000 in there. And again, I turned my $9,000 back in October into now $120,000. So don't think that if you're starting with $12,000. Don't think if you're starting with $12,000 that you can't grow that over the PDT rule. You definitely can do it. You definitely can do it. So just keep that in mind, guys. Just keep that in mind. Also, once you get to a certain level of disclosed taxable income, obviously if you make $500,000 in your business, but you have a ton of deductions and you bring it down, you're still gonna be able to do this. But once you're over $140,000 for a single person or $208,000 earned for a married couple, you can no longer deposit into your Roth IRA. So if you think you're gonna get to that point at some point and you don't have any money in there, you should probably put some in just in case you wanna trade later on. So I really like Roth IRAs for that reason. Now, I actually just opened an outside brokerage account. I just opened an individual brokerage account outside of my Roth IRA. And I did this for two reasons. Number one is the fact that Roth IRAs are limited in the types of trades that you can make. You cannot make some of the more risky trades. So, for example, you can only have limited margin on your account. You can't have a full margin account on a Roth IRA. And if you don't know what that means, well, let me explain. you cannot short in a limited margin account. Limited margin just means that you're able to get back your buying power instantly. But you need a full margin account to be able to short stocks, which is why I opened an outside brokerage account so that I can short stocks as well. So keep that in mind. If you want to do shorting, it's not going to be able to be a part of a Roth IRA. I also believe limited margin does not let you use leverage. I could be mistaken on that, but if you want to use 2-to-1 leverage, I don't recommend it. 3-to-1 leverage, whatever. You cannot do that, to my understanding, in a Roth IRA with limited margin. So if you want to have an actual account that allows you to do that, you're going to need to get, obviously, a real margin account. Also, again, the ability to withdraw before you retire. If you want to use the money, maybe you aren't in the lucky situation that I am. Not that it's luck, but if you're not in the situation that I am where you have outside income and you don't need your trading income to support yourself, maybe you want to do it in a normal brokerage account. Just know that you're going to pay those fees. And if you're buying and selling stocks and you're not holding for at least a year, you're going to be paying the highest, marginal? I think it's marginal. Highest marginal tax rate that you're in. So if you make $50,000 a year, whatever the tax bracket for $50,000 is, that's what you're paying on that. Versus I think it's only 10% or 15% if you hold more than a year. So for day trading, pretty much all that is going to be in the highest tax bracket that you personally pay. But if you only make $50,000 a year, you're not going to be paying 40% taxes on your day trading because you don't make enough to do that, if that makes sense. So don't worry about it in that regard. And yeah, hopefully this helps you guys understand why I trade in a Roth IRA, because to me it's so cool to be able to have this incredible growth and not have to pay taxes on it. Because, if I start making $500,000 a year from trading, $1 million a year from trading, they're going to charge me 30-40% taxes on that, which is really going to stink. So I may have to keep doing it in my Roth IRA mainly. Or I may have to look into some other solutions to avoid taxes. Avoiding is good. Evading is not. And look into Puerto Rico. If you guys want to learn more about that, I'll probably make a video about that at some point. I may have to move to Puerto Rico at some point. But Puerto Rico, you can actually pay zero tax outside of a Roth IRA, just in a normal brokerage account. They set that up for day traders. So I'll probably make a video about that at some point. But anyways, that's it, guys. Hopefully this helps you understand why I trade in a Roth IRA, and hopefully it helps you understand, whether you should make the switch or start depositing your Roth IRA now, because it could help you out and save a lot on taxes if you don't need to touch that money for a little while. Also, I'm not sure if I mentioned this, but you can also take out $10,000 from your Roth IRA without paying any fees if it's going towards your first house. And that's aside from your contributions. So again, if I deposited $15,000, turn that into $115,000, I could withdraw the $15,000, and I could withdraw another $10,000 for buying my first house. So just a few little loopholes like that for withdrawing money from your Roth IRA. But yeah, that's it, guys. Hopefully this video was helpful. If it was and you made it to the end, please smash that like button. Comment zebra if you made it to the end, because let's switch up the animals. And yeah, I'll see you guys in the next video. Until then, let's grow better together.